Hi, welcome to this episode of the Coronavirus Freight Market Update.
Welcome,
I'm
everybody.
Kevin Hill, here with Michael Vincent, and as always, it's May 19th, 2020. And as always, it's an interactive show, isn't it, Michael?
It is an interactive show, our twice-weekly show talking about the coronavirus freight news and market conditions. It's interactive, so get your questions in on FreightWaves LinkedIn and on Facebook, and we'd be happy to give you an answer. Or get them answered as best we possibly can, right?
Welcome
so
comments,
who we got
questions.
on today?
We have a phenomenal show today. We have a couple great outside guests. First, though, we'll have news with Andrew Koss, our senior research analyst here.
Yep.
And then we have, of course, Zach Strickland, our director of freight market intelligence, and then our lead economist, Anthony Smith, and then on to LaRocco, who is the senior guest editor at CNBC News and author of Trade Wars, Containers Don't Lie. And then at, I believe, 12:40, we have Bill Driegert.
Yeah, Bill Driegert, co-founder and head of operations at Uber Freight, will be on at 12:40, talking about the coronavirus, how it's affecting Uber Freight, and what he sees going on. So that's going to be an interesting
conversation.
Yeah, it's going to be great.
I can't wait to get to that.
Yeah, let's do the numbers.
First, by the numbers.
Yeah, let's do the numbers real quick. We always do this. So. Let's see. When we started this on March 17th, we were at 6,344 cases and 110 deaths. Last week on Thursday, we were at 1.4 million cases. We're now at 1.55 million cases. Deaths were at 85,197, and now they're at 92,000. The IMHE is saying somewhere around 142, 145,000, flattening end of May into June.
Yeah, and most states are now, at least in the beginning processes of opening up. Even
they are.
New York, parts of California.
What's it, 46 states now have at least semi-open?
I think
it
so.
is the count right now?
And there's plans for those remaining four to reopen very soon. So hopefully everything goes to plan and we can reopen this economy back up.
Yeah, and it doesn't look too bad. I mean, when you're looking at the curves, and we're not going through those numbers, but the daily case curves and deaths curves are still definitely on the downside since the beginning of May.
Take some time
coming down. Just take some time to get off that curve and
to acceptable levels.
Keep going in the right order. So should we get to the headlines?
Well, let's get to the headlines. And the beginning news came out Sunday night on Comcar. And that prepackaged bankruptcy, they have some stalking horses looking to buy their business units. And what's the rest of the story there, Andrew Cox?
Yeah, Kevin, you're right. The story did break on Sunday night. Comcar did file for bankruptcy in Delaware there on Sunday. It's filing for Chapter 11 and is selling its business units. And this is a little bit different than the Celadon bankruptcy, which we covered in depth back at the end of last year. And this was because the breakup didn't leave drivers stranded. They kind of have a plan to sell its 5 business units through this Chapter 11. And we got some documents from the chief restructuring officer that stated that company had lost $25 million last year and had lost $6 million all the way through the end of March of this year, so they're in bad shape. The officer also said if they hadn't taken this route, then it would have most certainly led to liquidation and the loss of the company's nearly 1,000 jobs.
Yeah, it's an interesting story, and interesting from the perspective of how they did this through the bankruptcy, the filing Chapter 11, allowing those business units to continue to operate, and then negotiating with potential buyers to try and save at least some or all of those jobs, right? Which is a really good move.
It definitely is. It's a very organized, looks like a very organized bankruptcy so far, right?
Looks like they're doing it the right way. Unfortunate for them, but it looks like they're doing it the right way.
Yeah, I'd agree. I'd say even just the fact that they have a chief restructuring officer gives them a little bit of insight into how to go through this.
Yeah, it's excellent. So what else have we got there, Andrew?
So the next up is Uber. We do have Bill Driegert on later on, but we have a story from the Wall Street Journal about an announcement Uber made. They're making another major round of layoffs, this time totaling 3,000 jobs. This comes just on the heels of another layoff in which they lost 3,700 jobs a couple months ago, and they closed 45 offices in this round. I didn't even know Uber had 45 offices, but they closed 45 of them. And the CEO, Dara, said in an email to the employees that they're having to make really tough decisions right now, now, and those tough decisions don't only stop at layoffs, but it looks at parts of their business that are truly cash incinerators. This has been a kind of a theme that they've had over the past few quarters, where they've sold some of those businesses that haven't been growing the way they'd like they would, or they've been very expensive and cash burning, including the scooters and bikes and Jump. They sold their India Eats division to another company there, and they ended up doing a deal with Didi Chuxing in China to try to relieve some of the pressure there. So this is a theme that's been ongoing. They're now looking at things like freight and autonomous vehicles as new places where they can maybe find and cut some of that cash burn.
Yeah, excellent. And we'll have Bill Driegert on a little bit later. We'll kind of dive in to see what that means for Uber Freight.
Yeah, I think around
specifically.
12:40.
Yeah,
Around
so
12:40.
That'll be interesting.
And the next headline is General Motors and Mexico operations. What do you have there, Andrew?
Yeah, Kevin, so the General Motors is going to open up a plant in Silao, Mexico on Wednesday, and it's been closed for more than 6 weeks, so this is good news for GM and for the workers there in Mexico. The Mexican government has been kind of conflicting, giving a lot of different messages about when they're going to allow the automotive industry to reopen. They've given 3 messages in just about a week's span. The first was that they were going to allow things to open just yesterday on Monday, May 18th. That would have lined up with the date that the Detroit auto manufacturers had set out to open up. Then they just 1 day later set out that it was going to be June 1st rather than May 18th. But now we've gotten a third message from the government that has stated that they will allow the auto manufacturers to open up their plant as soon as they give safety plans to the government and have them approved. So GM has gotten their plant in Silao approved, and the other major manufacturers like Ford, Chrysler, and Toyota have all stated that they announced plans that they would resume production as soon as their plans have been approved by the Mexican government.
Yeah, so it sounds like they're and I don't know where the pandemic or where they're at with their infection rates. I haven't been really tracking Mexico. I don't know if you have at all, Andrew, but it sounds like that's the negotiation. Are their workers ready to go back to work or not? So they're putting heavy pressure on the U.S. auto manufacturers who want to open up those plants in order to ensure that the safety of the workers that are coming back.
Definitely.
Yeah, I mean, that's obviously it, right?
Yeah,
maybe they didn't feel comfortable with it.
issues too, because I think Ford and GM opened up in the U.S. Yesterday. Is that correct, Andrew?
That is correct. They opened up some of their plants here, and you're right, Mike. That's kind of what I'm assuming, reading these different conflicting messages, is that the U.S. auto manufacturers have been in close communication with the Mexican government, trying to, I don't know whether they're pressuring them or not, but they're trying to do their best to ensure that their plants are opening back up, because like we've talked about in the past, these auto manufacturers are so tightly wound between Mexico and the U.S., between parts and full production moving back and forth, that they really need to be both online to get the whole system running. It's not much of a conveyor belt, it's more like a ballet, and to have it moving correctly, they both need to be open. So I think that they've been pressuring as much as they can to try to get that Mexican government to allow them to open back up.
Yeah, I would think. I mean, much like we saw with the moving parts with we were talking about with Volkswagen. Who was it that was Seisei Logistics had some things that were stuck due to the Celadon stoppage to try and get those things. So General Motors and so on opening up their plants in the United States. They must have parts, right, to start manufacturing, I would think, but those are going to run out quickly because it's just in time. So they've got to have those sources coming out of Mexico.
It is, and we've been hearing market chatter about expedited loads, and expedited's really picked up.
Expedited is through the roof right now.
Through the roof, trying to get those parts and components to where they need to be in the supply chain, which is for auto manufacturing, auto plants, is a very complex and timely, right? Because it's just-in-time manufacturing for the most part process.
Yeah, absolutely. So, like you said, Andrew, it's a ballet. It's a ballet.
What are the other headlines out today on FreightWaves.com, Andrew?
Well, Kevin, I've got an interesting thing that Seth Holm and I are kind of both working on that is likely to be published later on in the week, and probably with some help from Jason Miller. I don't know if you've seen Seth talk about he's looked at this Bank of America data and how some of the particular kind of breakouts by sector, how they correlate with our outbound tender volume index. And I think it's going to be a really interesting way to look at things when we look at grocery and retail and total card spending, because we've seen outbound tender volume index just explode really in the last 5 weeks, up 20% off the bottom. And we've also seen consumer spending bottom and rise at the same time. So we think that there's likely some strong correlation there. So we're going to be exploring that, and we hope to get it out by the end of the week.
And we'll be talking more about the credit card data coming up at 2 p.m. Eastern Time on Andrew and my show, Great Quarter Guys. And we have a special guest on today, Andrew, right?
Yeah, we sure do. That is actually my one good piece. I'll throw it out there. The one good piece is how strong consumer spending has been over the last 5 days of the trailing data. But we've also got Ryan Schreiber that's going to join us from Carrier Direct, and we're going to discuss what do the companies do that flourish in a recession. There's a Harvard Business article that we've looked at it was actually from 2010, but they looked at the recession in 82, the 82 crisis, the 90s, and the dot-com bust. And they looked at the 3 years. They looked at a bunch of public companies 3 years prior to the recession, during the recession, and 3 years after the recession. And they looked at the ways in which they were able to play kind of offense and defense, and what were the best strategies to get them out of the recession and get them emerge as a leader afterwards. So I think it's going to be a really interesting and intriguing discussion. So tune in at 2 p.m. Eastern.
Yeah, that's going to be really good. That's going to be really good. I'm looking forward to really hearing about the consumer sentiment index and seeing what you're seeing there and kind of what those trends are and what you think is moving forward, because obviously that plays into everything, right? We're talking about freight, we're talking about truckload, rail, international, and it all drives down to, okay, we're seeing a recovery in volumes, but are those volumes going to keep going there? And consumer sentiment drives a lot of that stuff, right?
It does. It drives, and we'll be talking about that.
And we got Zach coming up. Zach coming up right after this break.
After this break. Welcome back to the Coronavirus Freight Market Update. I'm Kevin Hill here with Michael Vincent, and we're joined now by our Director of Freight Market Intelligence here at FreightWaves, Zach Strickland. And Zach, the question on everyone's mind is, what's up with freight volumes, and can they keep their momentum?
Yeah, I wrote this article this weekend, basically exploring the concept of whether or not we're really seeing a significant stable recovery in the freight market in terms of volumes. And basically I pointed out, it is a positive sign to see such rapid growth and rapid recovery in our tender volume index. But I had to put out a word of caution because a lot of the volumes, like we saw in March, were heavily fragmented, exposed to consumer products, and different industries and different sectors showing spikes here and there, very uneven response in the market overall. And I pointed to customs data, and again, some of that, I get a little inside track on some of that research that Andrew Cox was just talking about on the Bank of America side. We are seeing a lot of recovery in credit card spending, consumer information, but I do think that a lot of what we're seeing right now is this initial wave of where everybody's starting to come back online. You're going to get this intermittent spike in freight volumes, and they're probably going to settle down at some point. And we are starting to see a little bit of that slowing this week, at least in the early stages of the week, where we're not seeing such robust week-over-week growth, which again we all knew was not sustainable at any point. So it is slowing down a little bit.
Yeah, so it's still growing, Zach, but it's at a little bit slower pace, right? And there's not much we can tell from that. I mean, as far as is this a stair step and it's going to pick up again, or if it's going to go down, right? So we got to keep watching that and looking at other numbers, like you said. So imports are still going down a bit, right, over the last couple weeks?
Yeah, they seem to have found a bottom for the time being. They had this big, robust growth at the end of April. Then they kind of fell down in the first week or so of May, and they've stabilized a pretty good bit here in the last week. So we might have hit a floor on that aspect. So, but still, it's more of a seasonal flow, which is good news in general, because that's going to keep your floor on the freight volumes a little bit higher potentially. But I think too, we're seeing some spillover effect in those volumes from this expedited freight that you guys were just talking about with Andrew. We're seeing a rapid increase. You can look at the air cargo rates right now; they're through the roof. A lot of that's spilling into the maritime sector, and it's hitting the ports of Los Angeles and Long Beach, and then it's getting on a truck going across the country as a lot of these distributors are trying to desperately refill their warehouses for some of these essential goods, and even these goods that people are more accustomed to seeing as they get these stimulus checks, and they're going online and they're ordering these things and they can't get them as quickly as they can traditionally. So I think you're seeing a reduction in this capacity in terms of these lower cut times as we used to see, Mike. Has kind of pressed the issue with some of this freight moving across the country right now, especially on the guaranteed delivery side.
So it's interesting, Zach. So are we? I mean, you mentioned the pressure on a lot of port markets, right? So there is that pressure there. But are we seeing upticks in other markets besides the port? And also, kind of follow up to that a little bit is, how much influence does the maritime imports actually have on the truckload volume? What percentage? I mean, if we see imports drop, should we expect volumes, OTVI, van to start to drop as well? Does it have that big of an influence on it more than our own economy?
Well, so two parts to your question. So the first answer for yes, we are seeing increases in other smaller markets across the United States right now. They may not be as big of a market, so it's really hard to say that it's driving a lot of the volume. It's just we do see a pretty tremendous impact from that Los Angeles market specifically, and Ontario, where a lot of the DCs are. So that whenever we see a statistically significant increase in volumes there, it's worth noting a little bit more so than some of the markets, say Portland, Oregon, or in Erie, Pennsylvania, which does not command a lot of freight outbound. The second part of your question, whether or not we should take the customs and imports seriously in regards to freight, yeah, you absolutely should. This is the inventory. Roughly 20 to 30%, fluctuating up and down a little bit, comes in from overseas. On the maritime side, a lot of that freight also, most of the freight that you see has some sort of touch point in other countries. And so whenever we do see those volumes increase, that means that they're basically loading the gun for freight to come out of these warehouses and DCs. It does not necessarily mean that you're all of a sudden going to see a week later a big push of freight moving through the country, but it does mean that there are, at least down the road, shippers are anticipating some sort of volume that they need to move throughout the country, so they're getting ahead of it. So to me, it's more like a little bit of a telescope into the future.
Well, thank you very much for those insights, Zach, and have a great day. Up next, we'll have our lead economist, Anthony Smith, talking about some of the latest economic numbers that have come out, and try to read some of the tea leaves that you find in economics. But
yeah, it was interesting. I'm glad Zach I thought to ask that question of Zach, because you look at imports and you look at the volumes that are going on, and you wonder, some people don't understand exactly how much those imports actually do affect our over the road.
I think it's one of those areas that gets undervalued quite a bit.
Yeah,
but it has a huge effect on freight volumes domestically, truckload, intermodal. How are we doing today, Anthony Smith?
Doing well. Excited and happy to be here with you all for this coronavirus freight update.
That's awesome. So what are some of the latest releases that have come out over the last few days?
Over the last few days, of course, last week we had the much anticipated jobless claims, which we went over last episode. But we also had retail sales and industrial production. I think not too much of a surprise what we saw with retail sales, over 15% decline from last month. I think this wasn't too much of a surprise because this is actually the first full month of data since the coronavirus pandemic has really started to ramp up. So when we're looking at March, that was a half month of data, and we already saw the impact, but now we're seeing April. And so seeing that much of a drop off during the month really kind of shows what the consumer spending and what markets really impacted throughout the month. And I think many are expecting this to be the worst month for both retail sales and industrial production.
Meaning the April numbers?
Correct, meaning the April number. So much of the consensus is that this is going to be the trough. Now that we're starting to see economies around the country start to open back up, that the worst of it is behind us. We are, of course, seeing, I think, as Andrew and Zach mentioned, of course, consumer spending, that's really being one of the things that's helping prop up the overall economy. We're looking at transportation, a lot of volumes and things like that. But that's really kind of being built off of, I think, of course, the last stimulus check and the increased unemployment benefits on a weekly basis, that additional $600 for many Americans. And I think that's really kind of helping prop up consumer spending and, of course, consumer sentiment, which also increased in the latest month.
It's interesting because we talked about that before. Is will the what is it, the PPP or the stimulus actually be a stimulus, or will be in lockdown long enough that it doesn't, and it becomes a survival check, right? And it seems like maybe we're seeing those numbers and the timing of reopening the economy where it actually will have a stimulus type of effect on a recovery. Is that what you're seeing?
What I'm seeing right now is definitely that it's upholding a lot of parts of the economy, but my economist mind, I have to think forward here, right? So when I'm looking at this, we know that this is set to expire at the end of July, last week of July, and so that means August, it could be up for extension or not. So we're unsure if this is going to get extended or not, and that also means that there needs to be some type of transition here. And a lot of times these aren't the most smooth transitions. So I'm really interested to see if there's another slight trough in consumer spending, if some benefits get cut off maybe a little bit too soon for some individuals, or some individuals are looking to remain on some of these benefits because they're making more now than they were before. So it's going to be interesting to see how we can prod consumers to get back into that workplace, even if now they're going to be making less. Is this going to be enough of incentive for them when we're looking at the July-August timeframe?
Thank you very much, Anthony Smith. We're coming up on a commercial break, but Anthony will be joining us after these words from our sponsors to delve more into what's coming out on the economic front over the last few days, and then what's coming up over this week coming up.
Welcome back to the Coronavirus Freight Market Update. We're still speaking with Anthony Smith, our lead economist. So, Anthony, what do you see on the manufacturing front?
On the manufacturing front, the most recent data set from industrial production saw that this was the worst month-to-month decline in the 101-year history. So this was something around the area of initial estimates of 15+% of month-to-month decline. For a year-over-year decline. But looking forward in the coming week, I'm going to be looking to the Philly Fed Manufacturing Index. This is going to be one of those kind of sentiment index that we can look at region by region basis, and that's one of the main indices that I'll be looking for in the coming week.
So we noticed, or we talked about last week on freight forecasting, that new orders really dove down in the April numbers, and so did back orders as well for manufacturing, right? So you're expecting those to increase, or how long will that take?
Right, so just as you mentioned, we looked at new orders, we looked at back orders, especially when we're looking at the ISM's PMI, and it really shows that there's not a lot of activity going on the business-to-business side of things, and capital expenditures are really, really low. So really looking at the Philly Fed Manufacturing Index to kind of see what things are like in that certain region, that particular region. Hopefully seeing a little bit more activity. Expectations are still relatively low, but it's going to be first seen on these regional bases. We're looking at either the Empire State Index, the Philly Fed, Dallas, Kansas City. Looking at these regional players first could be the first signs of early momentum building up within manufacturing.
Well, thank you, as always, Anthony Smith, our lead economist here at FreightWaves. Always interesting economic data, right, Vincent?
Oh, yeah, absolutely. Thank you, Anthony.
Yes.
Very insightful.
Yes.
Yeah, I mean, that's what you got to look to first, right?
It is.
You got to see what the consumer sentiment is, what is manufacturing doing, what are new orders doing, and that before you can start to think when and how strong is this recovery
And our
going to go.
next guest has her finger on the pulse of consumer demand, international demand. Maritime is LaRocco. She's a senior editor of guests at CNBC, and also the author of, and her newest book is Trade Wars, Containers Don't Lie. How are you doing today, Lori?
I'm doing well. How are you today?
I'm doing great. We are doing great here.
Good afternoon, Lori. Mike Vincent here.
Good afternoon.
So you had an article up on American Shipper last week on really the trade wars and the pandemic and what that is doing to international freight flows. Can you elaborate a little bit on that?
Sure thing. Well, based on the flow of trade, we're seeing firsthand just the change of the consumer, if you will, how the retailers a couple of months ago, they canceled a lot of orders looking into July and even into back to school for more of the PPE, more of the hand sanitizers, if you will. And based on that, we're actually seeing that impact now where the non-discretionary products are not being shipped. And that really trickles down to the ports and to logistics. You have less containers coming in, and we're seeing that right now.
I think we've been seeing that too with the Bank of America credit card data, looking at different consumer verticals and department stores. It looks like it's probably bottomed out a little bit, but it was down 50%. So we go, year over year for the weeks, for the last few weeks have been 50% year over year down, and that kind of feeds into what you're seeing on the freight flows.
Exactly, and it's only going to be. It's going to continue to go through. I spoke with Brett Rose, who's the head of UNCS that supplies Marshalls and TJ Maxx and other retailers, and they saw a significant drop in non-discretionary products, and they have seen an increase, particularly looking at back to school, for the hand sanitizers, for that personal protection. So based on all this, we're going to, the hurt's going to continue.
Now, we're talking about the American consumer. What about the Chinese consumer? Certainly they were hit with the pandemic to start out with. They opened up sooner than we have. What's the economic data coming out that you've seen about the Chinese consumer?
The interesting thing there is that while they have been open, for several more weeks than we have, of course, their consumer has not come back. And that's what's interesting, is that they're out there. We know how bullish and how much China has tried to push through, but they are not. They're not coming back as anticipated.
And do you think that's what we'll see in the U.S. as well, that slow ramp up where the consumer is coming back much more slowly than people had anticipated or hoped for a few weeks ago?
I think it really depends on where you live. I mean, I live in New Jersey, which was one of the hard-hit areas. I really don't feel like going to a mall anytime soon. New Yorkers, we have to see. And then in Kentucky, people are going out, I have cousins out there. It's just like normal. So I think it just depends.
I agree with that. In Tennessee, just near Kentucky there, it's returning to more normalcy than you probably are in the Northeast, definitely. You've had a few LinkedIn posts out on some new data. Can you highlight that?
Yeah, definitely. The continued trend of PPE being a driving force. We've got, you definitely have a lot of the shift from Freightos. They had some great data looking at how the small and medium-sized businesses are kind of trying to fill the voids online versus the void that we have seen with brick and mortar. When you're looking at the last month, if you will, Ocean Audit ran some data for me. We looked at the bills of lading from April 1st to May 14th. And the single largest order in one day was back in April from Walmart. And they had, 206 containers of patio furniture. So, that shows you the pulse of the consumer. Family Dollar, they've had last several shipments, all plastic bags. So it's interesting to see what these big retailers are bringing in, and that gives you insight into the mindset of the consumer. You know, Walmart, you're looking at pool products, you're looking at patio furniture and air conditioners.
That's interesting.
Exactly, like home improvement and essentials.
Yeah, people are going to be working from home on their patio equipment,
Exactly.
patio
I've
furniture.
seen quite a few people do that.
Right, and taking breaks on their Peloton bikes.
Yes.
Right. So, Lorianne, one question I had, just a point of clarification, I guess, is when you're talking about the retail demand and so on, it's kind of it's squashed and it's trending towards PPE instead. Are we're looking at orders from brick and mortar type stores, like you're saying, like Walmart, et cetera, or are these including e-commerce, and if it is brick and mortar, is it kind of indicative of the shift of the consumer to e-commerce instead of going to these large retailers?
You know, when you're looking at, when I spoke with UNCS about that specifically, it was, they have a unique blend where they've got 50 or 60% of their consumer is online. It's the third-party retailers. And then you have the TJ Maxx, you have the bricks and mortar. And I go, geez, you know, when you've got, like, say, TJ Maxx, you can't order online from that company. You've got to physically go into that store. I'll be curious once, like, New Jersey TJ Maxx opens. You know, they've got to clean house. They've got to rotate all new product in. So it's looking at both. And when you're looking at TJ Maxx and you're looking at all those other both bricks and mortar and online from UNCS, they've seen more of that push for the PPE, and particularly when it comes to back to school, because we really don't know what that's going to look like.
Yeah, exactly right. Thank you very much for your time, Lorianne. How do people reach out to you and find you?
Well, you can find me on American Shipper, of course, you know, with my column, LinkedIn, which is my name, and as well as Twitter.
Fantastic.
Excellent. Thank you, Lorianne.
Thank you very much for joining us today. And
yeah, it's very interesting stuff, right? I mean, you've got it just goes to you've got to pay attention to all these different things, because what she's talking about is really, she's trying to decipher that between brick and mortar and e-commerce, and then you've got back to school, not back to school. How do you figure that out?
Yeah.
But on the other side of this break,
tell us.
Bill Driegert with Uber Freight after this break.
Welcome back to the Coronavirus Freight Market Update. My name is Kevin Hill, here with Michael Vincent as always. And
welcome back,
we have
everybody.
A special guest coming up.
We do. Right now we've got Bill Driegert, co-founder and head of operations from Uber Freight. I believe we have him on Skype right now, and there he is. How you doing today, Bill?
Yep. Doing well. Happy to be here.
Good. So let's just jump right into it. So how is freight faring during this coronavirus crisis?
Yeah, this is a once in a lifetime event. It's been, as we've seen, incredibly disruptive for the industry, created a lot of uncertainty. We see our shippers changing plans on a weekly basis. March particularly was very unusual, with volume surging in some places and plummeting in others. For us as Freight, since the beginning, we've been very focused on how we can help our partners and communities through this crisis. So since the beginning, we've moved over 30,000 relief loads. We've also pushed forward several initiatives to help our partners, including Uber Eats vouchers, free sanitation supplies, moving free relief loads through our Move What Matters campaign, also providing PPE through partners like Salesforce. We also accelerated some industry-first partnerships, and this is where, through the crisis, I've been most proud of the team and what we've been able to do. So things like our partnerships with Cloud Kitchens and Ryder, where we're providing options for drivers across Uber to move freight. The other thing we've really seen as Uber Freight is an acceleration of the digital transformation of the market, and so our technology has really shown its value through this crisis.
Yeah, those initiatives are awesome. We had you on, I believe, What the Truck earlier in the year, a couple weeks back, and we were talking about those relief efforts that you were talking about, the PPEs and supporting the shippers, carriers, and that type of stuff. And it's always excellent to hear those stories. We hear so many of those stories, and that's one of the positives one of many positives that have come out of this crisis is people banding together and really working hard to make sure not take care of everybody, but in particular those that are frontline in logistics, right? I mean, and hopefully that keeps moving, right? Don't you? I mean, hopefully this sticks, right?
Yeah, a lot of what we're doing now, I can see carrying over into the future. I think a lot of things accelerated, and that a lot of the efforts that are very driver forward and partner friendly and really make lives easier for our carriers and our shippers. A lot of that, it's going to stick around for sure.
Yeah, it is excellent. So, Bill, there's been obviously recent reports that Uber is reconsidering the investment in freight, and I can see from the smile on your face, you know what I'm going to ask you. So, is this true? A reconsideration in freight, in Uber freight?
So there was a very small line in the Wall Street Journal, which led to a lot of speculation. And even before coronavirus hit, Uber Freight, as part of Uber, was already on our own path to profitability and greater automation. And then the crisis hit, and Uber Rides is down now over 80%. So this accelerated a lot of the hard decisions and changes that we, as Uber and as Uber Freight, needed to make on that path to profitability. These are extraordinary times. Every business in the world is under pressure right now. Many of our partners are under pressure, and we're doing our part to help them. But also internally, we had to do our part and make some hard decisions. We have to improve the balance sheet. So we did have to make some tough calls yesterday, including letting some very good people go. We continue to believe in the power of Uber Freight, the technology that we're bringing. Uber is fully invested in committing to growing the Uber Freight business. As a company, as Uber Freight, we're still operating at 100%, and we're still investing heavily in product and technology and pushing that path. So the news doesn't change our impact, or it doesn't impact our product roadmap or our ability to provide service. We just have to be mindful as Uber and as Uber Freight that we want to come out strong on the other side of this as well.
Yeah, it sounds like what it was. I mean, exactly what you just said. Some smart decisions that had to be made, and like many businesses, this crisis really kind of accelerated some of those things and put some emphasis on some areas that need to be tightened or whatever it happens to be. But for those out there that are thinking Uber Freight's death is imminent, that's not the case.
Yes.
Correct.
Grossly overstated.
Grossly overstated. Gotcha. So, how are the changes and the impact of coronavirus as far on Uber Freight through 2020 and 2021? Can you talk to that a little bit? What is ahead for you guys in 2020 and kind of further out?
Yeah. So as well as accelerating kind of some hard decisions, what we've also seen is that there's been an exceeding demand for technology and really the power of the tech that we've brought to market. And so we've seen this acceleration of adoption of our API as an example, where a lot of customers are looking for that instant freight, instant execution, instant pricing. And so a lot of changes and trends that really had already started at the beginning of 2020 when this crisis hit, we saw extreme volatility. And this is where the technology can really help. And so for our shippers who are facing their own challenges, who are hungry for information, they've been able to lean on us quite heavily. So I see 2020 into 2021, that technology footprint just increasing. And we've had a lot of announcements even through this crisis that had started at the beginning of the year and are just starting to come to market with Oracle and BlueJay and others, where we've partnered to deploy our API and to integrate that within their core tech. It says, as I look into the future, I just see that accelerating, that trend continuing.
Hi, Bill, this is Kevin. Let's talk about market trends. What are you seeing in the markets right now? You guys have an international presence. So the U.S. and the world, what are the key market trends that you're focused on right now?
Yeah, so at the beginning of the the crisis, we saw consumer essentials surge and declines in other freight, which created all sorts of imbalances in inbound and outbound channels. This led to initially much higher carrier costs, and then we saw, of course, the market soften. We went from a 250% surge in spot opportunities to a much softer market that we're seeing today. We started to see those declines through April, and then we started to see that bottom out a few weeks ago and start to stabilize again. Right. So, and we are an international company, so we saw a lot of similar trends in Europe, where that started a little bit earlier and has now stabilized, and we continue to see the volumes normalize there. What we saw also, I touched on the tech piece, but we saw spot volume surge, but we also saw real-time pricing calls really surge with over 150% increase in calls to our freight API, with also a significant increase in inbound interest from shippers. That's what we directly saw. And that's, again, where we've been able to, I think, help our shippers respond very quickly through the tech. But we are starting to see markets stabilize a bit as we all, look forward to things returning to normal.
You think we've hit a peak or certainly a bottom through the pandemic, and kind of where do we go from here as you see it?
Yeah, it's impossible to predict exactly what will happen. And I touched on it earlier, but I talk to shippers every week, and we've seen them adjust their forecast or try to forecast, and we adjust it almost on a weekly basis. We've seen shifts in expectations and new information, and I think everybody's trying to figure out how this recovery might play out. I definitely feel we're on the other side of the trough in the market, so it's good to see that freight volumes are starting to peak up market by market. But I also don't expect that the markets will ever return to the same place they were before, in the sense that the technology expectations have changed, networks have shifted, our shippers have changed their sourcing strategies, and we've seen fundamental changes in how shippers operate in the market. So I expect that things from a volume perspective are recovering, but in terms of just returning to normal, it's going to be a new normal.
So that is the new normal. So the recovery we're seeing right now is kind of starting to slow a little bit, and we've seen consumer sentiment, and we're talking about imports affecting that, and all the different modes, et cetera. And you talk about the manufacturer, shippers, et cetera, and their change in their sourcing, right? You had really the trade war that started before. All of this started to cause that kind of look at your new trading partners and changing your sourcing, or at least diversifying it a bit. And now this crisis talks to maybe bringing that a little bit more regional, like North American, right? And maybe less of a shorter supply chain, I should say, right? And so that's changing. And so when we think about these things and look at these, what are your thoughts on that change? How is that going to change? Are we going to see the sourcing become more regional and North American centralized? And how important is the trade talks in getting this passed through with Canada, United States, and Mexico?
I think that's a great point, and it's not something that I can predict in terms of exactly how things will evolve.
Right.
But I am confident that all of our shippers and those that had extreme supply disruptions because of dependencies in specific trade lanes or areas that were affected, everybody's looking at that right now. So I do expect that's going to make some changes in terms of sourcing strategies and how our partners think about where they place facilities and their own network design and topology. That's definitely going to be top of mind. So I think it wouldn't be reasonable to expect that there won't be changes and that we won't see more of that shift, but it's hard to predict the exact extent of that.
Exactly.
Yeah, exactly. So you've recently announced some COVID relief efforts, and I think you mentioned them a little bit in the beginning of the interview. Can you go a little bit more in depth with what Uber Freight has been doing on relief efforts?
Yeah, absolutely. Since the beginning of the crisis, we've shipped over 30,000 relief loads. And so we worked with our partners. There was the FMCSA designation of relief loads. We worked very quickly to build that capability into our tooling so that carriers could identify what relief loads are, but also so shippers could tag loads as relief loads. We also launched in March a zero profit pricing initiative for any relief freight, in which if shippers went to the freight shipper platform and entered a load, tagged it as relief, that we would price that at cost, effectively no margin to Uber Freight. Separately, we've been working with partners to cover the cost of relief freight for very specific needs, such as PPE loads. So we worked with Salesforce and shipped loads of PPE to UCSF. Salesforce had a large initiative where they invested significant funds in helping source PPE for frontline workers, and we were happy to be able to play a role in that. Now, we also work with longtime partners such as Feeding America to help ensure that food banks and food pantries stay stocked. It's obviously a huge dependency for them to be able to source transportation. It's a huge part of their costs and operating expense. So we're happy to be able to help them out there as well. But we're looking really across our network and our partners and trying to identify those opportunities. And wherever there's a clear opportunity that we can help and provide a service, then we want to be able to step in.
Awesome. You spoke about the API calls, and you had what you said, 150% increase in the API calls from shippers, right?
Yep.
Can you speak to that a little bit, the importance of that data and how that really is moving forward?
This is something that even before this crisis hit, I saw as a trend coming into 2020. We've seen, I'd say, an extreme increase in the level of interest and adoption of real-time pricing through APIs. So last year, we were the first to market with an API that was integrated with a TMS provider when we announced with SAP at the April of last year. Since then, we've added many additional TMS providers, most recently BlueJay and Oracle. And what that allows is for shipper, all of a sudden they have new information and instant information. And you can go into your TMS portal, you hit a button and you get a price. And not only do you get a price, but it's a guaranteed price. It's actually a price at which you can execute, which is much different than just getting a price that is an estimated price or through a third-party service where, there's been data services for a while where I can go and I can see, okay, this price, it says it's $1,000 at market, but I don't know if I can actually source it at $1,000, right? Versus being able to hit a button, get a price, and it's guaranteed. It's a very different transaction because it allows then instant execution and sourcing. And so for a shipper, you no longer have to do these tedious spot pricing exercises or send emails and faxes and phone calls, right? Which is really how business has been done. All of a sudden, it's instant. It's just like as a consumer, we expect the world to operate instantly these days, where I can, go to Amazon, hit a button, and it arrives tomorrow. Well, we're doing that with freight.
That's excellent. And is the same visibility on the carrier side as well?
Yes, actually, since we launched our product back in 2017, the carriers have always had that instant pricing visibility. We launched the shipper platform in 2018, where small shippers then have that visibility. What this really allows now is for enterprise shippers to have it within their own tools, because enterprise shippers have vast investments in TMS platforms and ERP systems, and so to be able to plug in and provide it right in front of them within those tooling, that's the big shift. So we've always been committed to transparent pricing. So even in May of 2017, when we launched the carrier application, the carriers could immediately download it and see a price. So they've always had that visibility. One thing we did launch on the carrier side, though, that gives them a little more control this year was we did launch bidding on some loads as well. So now they can actually put in bids, but they always have that buy it now instant pricing capability. That's been something fundamental that we've been driving since day one.
So that's great news, Bill. So what's next for Uber Freight over the next 12 to 18 months, going in through the pandemic and on the other side and product innovation? What's the grand plan?
Yeah. So I touched on some of this, but right now our focus is still in the crisis and getting to the other side of this. And so from a tech perspective and focus, we want to continue to push a lot of the APIs and a lot of the initiatives that we've already kind of kicked off. As I look into 2021, I do see a lot of this accelerating and becoming more and more tech-driven. I do expect that just the trends that have started now have just accelerated. So I expect a lot of this to carry forward into the future as we look to 2021.
Excellent stuff. Thank you so much for joining us, Bill. And for those out there, how do they learn more about Uber Freight and what you're doing out there, Bill? How do they get in contact with you guys?
You can always go to freight.uber.com, check out Uber Freight. It's got all the contact information right there.
Excellent. Thank you so much, Bill. Always a pleasure. Take care, my friend.
Thank you very much for your time. Been a great show.
There you have it.
There you have it, yes. A great interview with Bill Driegert at Uber Freight. Stick with us at 2 p.m. Eastern Time, which will be an hour from now. Great Quarter Guys comes up with myself and Andrew Cox. And so we'll be talking about being cost conscious in your freight brokerage, and a couple earnings statements after that with our guest from Carrier Direct, Ryan Schreiber. And then on tomorrow, put that coffee down, we'll have truckstop.com on. Trent Broberg will be joining us talking about returning to normalcy or managing in a crisis. And after that, with SONAR at 4 o'clock on Wednesday. And then Thursday, we're back here with another coronavirus freight market update. And then at 4 o'clock is freight forecasting with Michael Vincent.
Yeah, we'll be looking at how to forecast and try and figure out if this volumes are going to keep increasing or not.
Yes. And then Friday, as always, what the truck. Is it going to be epic or legendary?
It'll be
or
epicer. It'll be even epicer. I mean, it was an epic, and the one we had yesterday. If you haven't seen it, go back.
Yeah, who was on yesterday?
Because yesterday was great. So we had Michael Letto, CEO at Emerge, was on, and then we had who's becoming a new regular kind of is Lawrence Alvarado, who's CEO at WareCap and also a professor at Catholic University in D.C. So go back and catch those, and
on
we'll catch you guys on Thursday.
Yes, catch you on Thursday.